Let's focus on the new year as we are getting ready to wind down 2016. We were hit by the government's demonetization move and the FMCG sector has borne the brunt of that. How will 2017 pan out with the cash crunch headwinds still looking intact? Varun Lohchab, the MD and Head of Research at Religare Capital Markets, Abneesh, the Associate Director at Edelweiss Securities, and Amnish Aggarwal, the Senior Vice President of Research at Prabhudas, Lilladher, join in now to assess the impact. Gentlemen, morning to all of you and thanks so much for joining in. Abneesh, I want to start off with you. Some of these companies have been reporting weak earnings or weak volume growth even before the demonetization impact hit them. How long do you think this slower earnings and slower volume growth is going to last?
So obviously in Q3 post November 8 there has been impact. Initially, as per our detailed channel checks, there was almost 60-70% drop in the first few days, but then it started improving. For the full quarter we still expect decline for most companies. Depending upon category there will be the range. In Q4 we expect towards the end of February, I think things should start normalizing, because clearly now government has also stepped up the printing of the 500 rupee note. And companies are also taking a lot of proactive action. More promotions are happening. Now advertising spend also, which had become curtailed in November by most FMCG companies, that has started to come back. So I think in Q4 from maybe March, we should see recovery definitely happening. Things are becoming better, but recovery should happen on a YOY basis, mostly from March. That's how I see.
Okay, well, stay on. We have two more guests who join in. And in fact, for the rest of the show, my colleague Rima Tendulkar also joins us. Hi, Rima.
Hi, Sonia. Straight away, let's continue with the discussion then. Varun, compounding the problems for the FMCG stocks over and above the demonetization is the fact that we've seen a consistent increase in raw material prices, and that might impact the margin picture going ahead. How are you penciling in the revenues as well as the margin pressure FMCG companies could see in Q3 as well as Q4?
Yeah, so if I look at revenue growth, we believe the negative price impact which we had on the sector for last few quarters. So Q2 it was starting to kind of get neutralized anyway. Now we expect some positive pricing to come, so that should help the revenue growth to some extent. But we believe the margins clearly have a room to go down. We are sitting on peak margins for most of the companies. The raw material inflation has been quite sharp in a lot of commodities like palm oil and some of the other crude derivatives. We believe in this environment, when the underlying demand is very fragile. If you look at the previous raw material upcycles, which was 2007, early 2008, and 2011-12. At that time, the underlying demand was much better, so companies were taking quite proactive price hikes. But despite that, we had seen margin erosion for these companies at gross margin level and even to some extent at EBITDA margin level. I think in this environment it would be probably even sharper. So we expect, we have recently cut our earning estimate for most of the companies for FY 17, 18, 19, and this is more predicated on the raw material increase which we are seeing, which will lead to mild kind of downtick in the EBITDA margins and the gross margins of the company. And on top line, we have built in slightly higher price-led inflation. But net earnings will get impacted.
Okay, earnings will get impacted. Amnish Aggarwal also joins in from Prabhudas Lilladher. Amnish, I'll come back to earnings in a bit, but first I wanted your thoughts on the price action, because some of these stocks like Marico have been great multi-baggers in the past, but recently, since the month of July, August, these stocks have fallen about 20-30%. At what point do they start to become interesting buys again?
The stock price movement sometimes may be not only the function of fundamental but the market expectations. Because what has happened is that there was a lot of hope which was built on that the second half of the year would be good, the demand would come back. And as the things have not moved out in that manner, the stocks have corrected, because earlier what was happening was it was more like a, you can say, margin expansion and PE expansion. So that's why not only Marico, I think many of the other FMCG stocks have also corrected.
Okay. Amnish, right now the street is expecting that the situation should improve by H2 of FY18. Is it all in the price? Is there an opportunity to buy any individual FMCG names right now? And if yes, what would be the investment thesis?
It is in the price. For the simple reason being that we have not seen earnings cut happening in the estimates from the street for most of the consumer names. And secondly, we are having a very different cycle this time around, as not only the demand has got impacted, but the input costs are also moving up. So I don't think that even if your demand comes back, say in a quarter or so, or maybe 2 quarters, then you can say the margins can support the kind of earnings growth we have seen in the past 2-3 years.
Okay. I wanted to discuss also at length what's happening in the paint space, and Abneesh, come in on that, because the paint companies seem to have been bearing the biggest brunt of the demonetization impact on demand. Some of these stocks like Asian Paints have seen absolutely no recovery since demonetization was announced, in fact fallen about 20-25%. Is it because of how expensive valuations are, or is it because of there's no way to find out what the damage on demand could be?
No, we are positive on Asian Paints. Obviously, the fall has made it more attractive. See, in paints, because of demonetization, there is slight difference. The painting may get postponed, unlike, say, consuming chips or any other snacks, which gets that opportunity gets lost because of demonetization. In paint, what will happen when cash comes back, the demand will come back in most cases. Plus, because of GST, there will be market share gains. And in the past, we have seen also that paint companies have consistently given the strongest volume growth even in the last 1 year, and because of very high pricing power. So yes, crude oil has moved up, but if you remember, crude is still way below the $100-120 we have seen earlier. So these companies are strong pricing power. So in our thesis, clearly paint is one of the highest conviction bets in the consumer space. We believe it's a good time to start buying these companies. Correction has happened because these stocks are overowned. There is a broader market correction. Crude prices have gone up. But if you really go deep, there is strong pricing power in this industry, and anyway, demand trends are quite strong. Demonetization has derailed everything, but we believe because of GST also 30% of the unorganized sector, that definitely market share gains will happen for Asian Paints merger, etc. So we are positive on that space.
Varun, would you concur? Do you believe Asian Paints has the pricing power in the situation we are currently in, which can protect its margins, because you don't have a buy recommendation on Asian Paints?
Yeah, we have had a sell recommendation on Asian Paints for some time now, over last 9 to 12 months. We believe valuations had gone just way out of whack, and risk reward wasn't favorable on the stock. I think pricing power is there. Definitely, we have seen in the past that paint companies are quite nimble in terms of taking price hikes and even passing on the cost advantage at times with some sort of price declines, which we have seen earlier this year at the beginning. But as I said, if I look at, say, probably in February or March of this year, we expect Asian Paints to take a price hike. But we doubt they would be able to take the big quantums of 8 to 10%, which might be needed to completely neutralize the RM pressure. What they might take is a 3 to 4% price hike, and they would look to absorb some sort of impact on gross margins, because anyway they are sitting at really high gross margins if you look at the last 5 years sort of a trend. So yeah, pricing power is there, but from these levels we expect some moderation in gross and EBITDA margins even for Asian Paints.
Okay. Well, the other space I wanted to discuss is, some of these companies like Pidilite, which have been once again very good wealth creators in the past, but this year has been quite disappointing for them. Amnish, you're positive on Pidilite. The earnings have been decent, but the stock has fallen considerably over the last couple of months. Do you think that one can get better levels in the quarters to come, or do you think this is a good price to buy?
I think the stock has corrected a lot. I think it's a good time to buy again a very quality name. This company, in fact, has higher market share even than Asian Paints in its respective space. We hardly know any pan-India competition to Pidilite, which has existed for a long time. The Asian Paint has come in this space in some segments of Pidilite, but definitely Pidilite's market share is very strong. Again, very strong pricing power. Yes, the margins for most of these companies are at a life high. There could be some shave off of the margins, but definitely with discretionary consumption coming back after demonetization eases off. And because of GST, again, these are companies which will gain market share. There are a lot of regional players in this. We don't know those names because those are very small names in respective states. But there is a lot of market share gain opportunity available again for Pidilite also. The key raw material is vinyl acetate monomer, so that has some indirect correlation with crude oil. But again, as I said, last 1 year, most of these companies have not taken price increase at all. In fact, there has been a price cut for most of these companies. So we have to see beyond March. I think after March, clearly there will be price increase for these kind of companies, which is having high discipline, high pricing power. And last 1 year, anyway, there has been a price cut. So there is opportunity for price increase for these kind of companies.
Okay, gentlemen, we'll leave it at that. Thank you so much for